accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Friday, August the 12th. I'm John. Thanks for trusting me with your time. Sorry I'm a little late. I did start the wrong stream for the forecast this morning, so I apologize for my being tardy. I don't feel tardy, but I am tardy. I apologize again. Yes, today is Friday, August the 12th, our last day to put entries in our chapter of this week's chapter in this year's trading book. As always, our focus here is on accurate context, good risk management, and focusing always on remaining patient. Today is National Vinyl Record Day, so I'm trying to figure out which album I want to put on after the market forecast. Maybe that's why I messed up the stream, and I again do apologize. This morning we have the 7:30 import-export numbers out. They were a little bit lower than expected and very little response from U.S. markets in that regard. We're still waiting for the 9 o'clock Michigan sentiment numbers due out. We did have some interesting information from some of our European friends. The British GDP numbers came out, the preliminaries, and they did not come out as badly as expected. So that I would think is good news all around. We also had some interesting numbers from Spanish CPI numbers that came out a little bit mixed. So those aren't really going to be affecting us today, just kind of keeping an eye on what's going on in the rest of the world. Our stocks are set to open higher today in an attempt to finish the fourth straight positive week. There's a short list of Friday earnings due out, nothing too impactful, of course. Crude prices tend higher this week, but off their highs after a Russian pipeline indicates crude shipments to Central Europe may resume soon. As always, make sure you hit that lucky like button, share, comment, question, feedback, heckling, which I do deserve and love, are always welcome on the market forecast recap and everything. Make sure you subscribe to our YouTube channel so you do get notified when we do go live. The VIX down a little bit this morning, but higher than it was yesterday at this time. 19.95. The dollar index up a little bit this morning, 105.48, and the yield on the 10-year down this morning, but again, higher than this point yesterday at 2.86%. What else was I going to tell you? Well, anyways, got to say good morning to everyone. Patrick, first in the room. You win the prize. Scott saw and he conquered. Tachyon, David, my brother Rick, love you. We had Tom in the room yesterday for the recap. Brian, good morning. Alfred with a really important question here. Alfred's question is, good morning, traders. Because you encourage patience, typically what time of the day do you enter your first trade? This is something that you're going to talk about from where I sit. Where I sit, I think that the market, when it opens in certain situations, may offer earlier opportunities as the best trade location of the day. And sometimes the market's going to open in situations where I feel it's better off to be patient, let the market establish some early range, and then focus on those extremes for the opportunities. So, Alfred, it's really up to you to kind of take a look at the tools that you're looking at and account for how often early opportunities would pay out, and the situations that the market is in those opportunities. So we're going to be looking at the S&Ps, and the S&Ps are trading right in the middle of yesterday's range, inside value. That's going to be a situation where I'm probably going to try and be patient, waiting for better opportunities as the day goes on. Yesterday, we opened with a big gap in the S&Ps. It didn't turn out that the best trade location was early in the session even yesterday. So it's it's all part of the homework. It's all part of the context. It's all, of course, part of the risk management when you decide to get into the markets. If you're trading overnight, when's a good time there? I can't tell you. I don't trade overnight. But we're pretty much always, Alfred, kind of thinking about, okay, if we're in range in value, it may be better for us to be looking for opportunities as the day goes on, letting that early range initial balance establish itself before getting involved. I wish I could tell you 100% when it's the right thing to do and when it's not the right thing to do, but unfortunately, nobody can do that. Good morning, Shaw. Capital Preservation Day, of course. Theo, good morning. Terry, Charles, Bill, Jorg, Duque, James, Serenity Trader, buen dia. Randall, good to see you here this morning. Ron, good to see you. Jerry is awake. Brody, Glitter Sandwich, good morning, everyone. Yesterday was rough, but today's going to be great. Sarah Hall, good morning. Prayers and love to you as well. Trading Research, good morning from the woods of southern Michigan. Always a great place to be. Pete, Dan Trader, good morning. Lacey's around here somewhere. Good morning. Let's have a great day. D.A., Frederico, Mike, Dimitar, Nicholas, J.D., good to see you. Hope everything's all right. Sorry about that. Orion, good morning. Joe, Nicholas, Mike, Dark Kevin, good morning. Haggle Matters, Rooster, Mike, what do you think the teacher will look like this year? Little Van Halen there. Maybe that's what I'll put on for my Vinyl Friday here. Vince, good morning. Shaw, I don't feel 30. Yeah, I know. Sorry about that, folks. I'll get a detention tomorrow. Yeah, I think I should get a detention tomorrow. JST Wave, good morning. I'm going to probably not pronounce this very well. Servide. Good morning, Mike. Yankees, 71-41. Everybody loves to hate the Yankees. Frederico, overnight trading for some products. It's useful to watch the London session, of course. Okay, I'm glad, Alfred. Rob T, good morning, and Rob Crust. All right. Well, I was the gremlin this morning. Let's see what we can figure out in these markets. I got my pencil. Give me something to write on. All right. It's Friday, of course. Casual Friday. Let's take a look at the charts. Okay. Servade. All right, thank you for the phonetic pronunciation. Dave's not here. Good morning. Faraz from Saudi Arabia. Welcome, Faraz. Looking forward to your success. Okay. So yesterday, all of the nuances were pointing to the upside. And it's really what we ended up with the day with. But unfortunately, in the day time frame, most of our activity was to the downside. The question would be then, are the S&Ps, or were they yesterday, a little bit too long to continue to rally? We still had an overlapping to higher overall extended trading hour range. We did end up closing the gap at the end of the day. But overall, this is a positive bar. It is a big possible excess at the top of this bar. But again, we're in the fourth week of positive movement here in the S&Ps. So yesterday, we had decent volume, and we lost 12,000 in open interest. So yesterday, it seems more like a long liquidation or a profit-taking event that I might have expected on today, but it happened yesterday. The medium time frame upside structure remains intact. So I don't think that there's any, unless something happens, any major turnarounds coming at us, even with the excess on this daily bar. And why? Here's the 30-minute chart. Yeah, one of my Grandpa Ray's last words to Dad were never bet against the Yankees, all right? Oh, my goodness. All right, so Yesterday, late spike, opening against the late spike with a gap. All the nuances and tea leaves and chicken bones were looking like we were going to have a higher day. And we did. Value outright higher yesterday, even though the market pulled back and closed the gap and did all that throughout the session yesterday. We lost, again, approximately 12,000 in open interest, which looks more like profit taking than a really decent pullback to the downside. If we were bringing in sellers, we would have increased open interest yesterday. Instead, we lost it. Volume was okay, usually is good on down days. We settled within one tick of the previous settlement here on Wednesday, Thursday, today is Friday. We've got some overnight longs here, but these overnight longs have taken us to where? Basically point of control from yesterday. Inside range, inside value. So, Alfred, am I going to be aggressive on the opening this morning? I'm going to go with probably not. Anything can happen. Something may change between now and the open, but we're right at the point of control from yesterday, which is considered basically the fairest price of the day. It's the most popular, highest volume, usually the most visited in time price. Do I want to take a trade here? I do not. Now, there's the potential for some repair. We had a pretty toothy profile yesterday. We had a big gap down below. I'm not really looking at that as a possibility for us today, but I'd better be prepared for it if it does get down there. So settlement is here, 42.0975. We've got some overnight longs. Those overnight longs have taken us to the point of control from yesterday. Again, the fairest, most popular price yesterday. Don't want to trade there. I'm going to probably, again, be patient, look for opportunities as the day goes on. If we get a pullback due to overnight inventories, our overnight long, the low from yesterday, the high from the day before, the point of control from the day before, all of this is really kind of high target. This is an area where I would think we would be able to find some pretty decent fish. If we don't, then I'm going to let that first hour establish itself, the initial balance, and then I'll focus on the extremes of that initial balance for my opportunities. When we were in group coaching the day before yesterday, we looked back, and in the S&Ps, the one extreme of the initial balance remained an extreme for the regular trading hour session in 19 of 20 sessions. I'll say that again. In 95% of day session ranges in the S&Ps for the last 20 sessions, 19 of those offered the best trading location at one extreme of the initial balance or the other. Now, the initial balance is the first hour of trade. Yesterday, it happened again. We opened the 9 o'clock to 9:30 bar, put in the high. This is the high of the initial balance. And the rest of the day, the market broke to the downside. So when we're looking at that initial balance, there's a high probability that one extreme or the other is going to remain as an extreme of the session. Entering or trading near those levels can give us a great opportunity to limit risk. To limit risk and give you some pretty good trade locations. Now, this changes. We looked at it in group coaching on Wednesday. We countered them out. So now it's 20 of 21 of the last sessions. One extreme of the initial balance remained as a high or a low for the entire session. Think about that. We're in the middle of this. I'm not going to be really looking all that aggressively for opportunities until the day goes on. That is where, yes, A and B periods help. Yes, the initial balance can certainly help. Yeah, it is. Calves and cubs. Calves and cubs. It is an incredible thing, and we went day by day and counted it out. Now, including yesterday, it's 20 out of 21 days where one extreme of the initial balance remained the extreme for the entire session. Let's take a look at crude oil now. Rollover is scheduled to occur next Wednesday, August the 17th. It will usually be on or about that day. I'll let you know what day I will be switching. I'm just going to be watching volume. We got a positive week here now in crude oil. We've been coming off those highs. First positive week maybe we've seen in a little while. Inside extended trading hour range from yesterday's range here so far. Yesterday on this push to the upside, we did not bring volume. That, of course, is going to be blurry because of the fact that we're in rollover, and we added 5,900 in open interest. Again, that can be blurry due to rollover. It does indicate maybe that we did bring in some new buyers up here that took us right to this trend line, which was based off of these three points. When we broke out down below that, that was a pretty decent opportunity. Now we're back to this level, this trend line, which was supportive, was resistant yesterday. It might be an interesting spot for us to check today if we do manage to get to it. Did we trap some longs here yesterday? It's entirely possible. It is in rollover. That's going to make things a little bit hairy. So here is crude oil. Settlement's all the way up here from 94.34. An emotional move to the upside. Looks like we've left the opening range at the low of the session and we're driving higher. Okay, so we are at basically the extreme of the range from yesterday, and maybe we've left the opening range at the low. But this day is really lining up like a day that might fall into repair. Repair is, there's single TPOs here to here. There's a high volume node, which is the point of control. There's a high volume node up here, up near settlement. If we start to spend some time up there, there's a pretty good probability that we are going to check both of those high volume nodes. Whoops. But again, inside the value area, I try and stay patient. Here's that first minute of trade. Our opening range trade is pretty gigantic. It's 60 points, 60 tick opening range to the upside. Too rich for my blood to try and take that trade. So that's going to force me to be patient. That's a huge opening range. 60 ticks. Woof. So stay patient. We're in range. We're in value. If the opening range remains the extreme, that's going to be our initial balance extreme. Watch for the initial balance extreme on the upside and then focus on those extremes as the day goes on. Very little change to the perception of value of a barrel of crude oil from yesterday to today. Let's check the Nasdaq. Nasdaq, similar market to the S&Ps, but a whole different situation, isn't it? The auction seems to be struggling up against this weekly kickoff high here, whereas the S&P is somewhat struggling in this area, but has already broken out and is holding above its weekly kickoff high. Open interest, we lost about 400 yesterday. Not a big amount of profit taking occurring yesterday, and the market's still wrestling with this weekly kickoff high. That open interest change I'm viewing as inert. I mean, there was not a lot of contracts changing hands yesterday, even though volume was pretty good. The Nasdaq is seemingly falling into balance just below weekly kickoff high here, whereas the S&Ps are looking a lot more directional. Let's take a look at the 30-minute chart here. So here's that weekly kickoff high. We get to it and we fail. We get to it, we hold. We fail, we hold. We open up above it yesterday. The sellers come in and take us lower. Here's where we are. Look at how emotional this trading day was. Emotional means probably shorter time frame traders. You see all these high volume, low volume, high volume, low volume, high volume, low volume. This weekly kickoff level did not provide the opportunities for longer time frame traders to enter the marketplace. It doesn't mean that it's not going to. We did not get an acceptance above this level. We got rejection. We're going to see, we got settlement down here at 13,311. We're going to get another shot at this weekly kickoff level, but because yesterday was such an emotional and toothy profile, I believe that it may fall more into repair to see if there's any business in these holes here that needs to be taken care of before we can continue a directional move. Patience, we are in range and in value. All right. Gold. Okay, we got a little crack in the structure here. We got 3, 2, 4, some points of contact here. Our upside structure might be taking a little bit of a break here. We closed below it yesterday. This is pretty steep. I don't think that we're going to see any kind of major pullback in this, but at least it gives us an idea. And we've been watching this. I mean, the upside auction has been struggling in gold for the entire week and into last week. Volume slowed yesterday. Open interest increased in a push against the direction of the bigger direction here. We added 2,300 yesterday in open interest. The volume was low, but we see that there were some traders willing to take short bets. I'm hoping that these traders that are holding these short bets are going to eat their lunch today, but I don't get to choose that. Take a look at the 30 here. Okay, I was really kind of hoping that what we were seeing over the past couple of days was a bull flag. Already, we're kind of holding above this bull flag. Open interest at the time this morning was mixed. Now it seems like that we've reconciled any overnight inventory, and we're depending on regular trading hour traders to operate to push this market in one direction or the other. I'm liking the fact that we're holding above this level here. This is a kind of a loose trend line here, only a couple of points of contact, but it's showing that there's a downside slowing momentum move to the downside against the bigger picture that the market is trying to go higher. And this breakout above here could be enough to prove that this is a bull flag, and we may see this market continue its move to the upside. Yeah, Rick is saying two JP Morgan traders found guilty of spoofing and manipulating gold futures. That's a hard thing to prove. So, I'm kind of hoping that if we find some support along this line, we're going to see this market continue to move to the upside. It's a little bit range bound here. It's a little bit still on the back burner for me as a product to trade. But I think there were maybe some more interesting things coming maybe today or maybe as next week comes to us. The euro. All right. Well, higher prices did not bring new business. We had 2 days up there with which to attract buyers, And they just didn't come. They just didn't come. Yesterday we lost 1,000 in open interest on lower volume. That's not what we're looking for a new auction to the upside. We're looking for bigger volume and an increase in open interest. The opposite happened. Doesn't surprise me that we're falling back into range today. Here's the 30. Okay. Here's weekly kickoff. Here's last week's high. 2 attempts to continue this push to the upside. We couldn't take out the previous day's high yesterday. It doesn't surprise me that this market has just exhausted itself to the upside. You remember how many times we hit this trend line here on the daily chart, and we finally exhausted those sellers up there, but we did not attract buyers when we got back up there. So technically, I'm going to be looking for opportunities to perhaps short against the weekly kickoff level right here, which is 103.15. We've got a gap. We've got overnight inventory to the short side, but it doesn't seem to be bothering them just yet. Maybe we found some new interest in selling this market against this area. These weekly kickoff levels, remember, they're not necessarily technical levels. These are levels that I come up with that I think longer, stronger traders are going to need to adjust inventories. Sometimes we're really right on those, sometimes not so much, but I think we were pretty right on this weekly kickoff high as many times as it was visited and rejected. We've shown some signs of acceptance, and now we're seeing some possible resistance or rejection of higher pricing in and around that level. Here's the 10-year. Okay, we've got 1, 2, no real major trend line here. There's only 2 points of contact, really, just to kind of show that we're in a channel here. We did break out below that yesterday on low volume and lower open interest of about 5,900. We lost open interest on that move. So no indication that this is a market state changer. Already we see price coming back into that channel. Take a look at the 30. I hate it when I do that. Take a look at the 30. We just filled in basically this gap here, and we seem to be satisfied with that and maybe heading back to the upside. This gap, of course, is the high of this gap is a weekly low from last week, so that's might be somewhat impactful for us, but we got a lot of repair due in this profile. We've got high volume node here, low volume, high volume, low volume, a little bit higher volume. If we can manage to get out of this gap here, I can certainly see a move back up to this higher high volume node here in repair of this area here. Very emotional. Not a lot of opportunity to trade there. So the price is going to come back there for a little bit more opportunity to trade before choosing direction. In the nat gas, our cup and saucer, our cup and handle, certainly brought a nice move to the upside yesterday. Higher volume, adding 6,100 in open interest to this push to the upside yesterday. So volume and open interest increased in that cup and handle formation, potential breakout to the upside. Weekly kickoff high, still resistant. Here's the 30. Repair. No real overnight inventory. Okay, we're looking at high volume node here and high volume node up here to point of control. I would say we've tested this one. If we can't take out this area here, I mean, look at this. We got point of control. We got settlement. We got weekly kickoff high. We have value high. And we have yesterday's session high, all in this area here. I'll bet you there's a lunker under this pier. Nice, big, fat, musky. What side of the boat? We don't know. But I still think we're probably likely to come back and return and recheck these high volume nodes here. If not, well, then we're going to know what side of the lunker, what side of the boat the lunkers are going to be on. Either way, this area offers us the opportunity to limit risk so we can lose the worm, not the rod and reel. All right. Well, we have our task upon us. Typically on Fridays, I like to make a little bit of money and call it an early day, but I'm going to try and stay very patient today. I don't want to get too aggressive. I don't want to be looking for trades, because when I look for trades, I find them and they're usually not the ones that I'm hoping for. They're usually not the good ones. So I'm going to be patient. If I find something good and make a little bit of money this morning, maybe we'll just call it an early day. There's no recap, no other events today, so that gives me a chance to take care of some other things. And work on some more educational opportunities for us all. So I'm gonna call this a forecast. Take your deep breath. Stay humble, grateful, and creative today in your trading, and I'm looking forward to seeing everybody for another interesting, fascinating, and hopefully profitable week next week. Blessings to you all. Be kind to yourself, be kind to others. Say a prayer for world peace and a prayer for peace within yourself. And have a great weekend. Get some rest, have some fun. Call your mom, call your dad, call the friend that you haven't talked to in a while. Call your brother, call your sister. Tell them you love them. Have a great weekend.